We are now joined by Peter McGuire, CEO at AustraliaTrading.com. Peter, thanks so much for taking your time out and joining us here on ET Now. We've barely seen any impact of the OPEC Plus supply hike announcement that came in a couple of weeks ago. Oil market has not done much. It is currently trading near $69 per barrel mark. How do you see the demand-supply equation shaping up for the oil market, and what is the outlook going forward?
Well, good morning. Thanks for allowing me on the show. Greetings from Sydney. Couple of things. First off, yes, we understand. I think oil prices are very much flatlined. They've been very range-bound over the last couple of weeks and certainly month or so. So that tightness, there's no real breakout either side. We're not down at under 65 and we're not above 70. So it really in that narrow band. Second part, as far as growth, and growth is what the market is identifying in the second half. Relatively strong growth from the likes of Brazil. Certainly when you're looking at economic growth coming from the likes of China as well and India. So there's the first part of it. So that's going to be relatively good from a demand picture. And the other side, Eurozone and the USA really starting to pick up and be re-engaged. Post that COVID situation, but very much, I think the growth engine of the second half is going to be stronger than the first.
Okay. Hi, Peter. This is Kanishka also joining in. Just stretching a little bit into the demand point. Now, despite that optimism that we have seen, OPEC Plus that has kept the 2025 and 2026 oil demand forecast unchanged. So, do you see this as a sign of caution?
It's to some extent caution, but the other side, I think, is the overall re-engagement. A lot of these economies are relatively okay. I mean, from a growth perspective and moving forward. So I think that you're going to see continued demand. There's no going to be any, in the sense of any drawdowns, and you're going to see disruptions unless you saw something dramatic happen from a geopolitical standpoint. Let's push that out of there. But if you continue this sort of roll forward, then I'm pretty sure that you're going to see a re-engagement as far as consumption and, of course, for the likes of all forms of oil and all forms of energy, from road building and bitumen all the way through to naturally, motor vehicles and trucks and cars and boats and so on.
Okay, so that's as far as demand outlook is concerned. But Peter, there were also some reports which suggested that perhaps OPEC Plus could pause the output hike after September. It is already planned till August and September, which means that total 2.2 million barrels of unwinding will be completed 1 year ahead of their schedule. Do you expect OPEC Plus to then pause their output hike after September, given how demand is shaping up?
Well, I think we've got to work through that. We've got to see how the market anticipates and experiences over the next 2 months. You've got the introduction of tariffs. We've got the understanding as far as price, what's happening on the inflation story that's globally, and the positioning as far as OPEC Plus and compliance. So I think we've got to get through the next 55 days or so, 50 days, to take a better picture as far as OPEC and what they're expecting in Q4. If they were to stay at that 548,000 as far as production, up from 411,000, then I think it's very much in their hands. So you can't rule out that they won't do it, but I can't rule out that they will do it. So we've just got to take it, very much week by week to get to that point.
Okay. So Peter, now, just as you were mentioning, when we started the conversation, that emerging markets are showing some sort of strength. So with India, China and Brazil, with them outperforming, how much of the oil demand outlook that OPEC Plus has given, do you think hinges on these three economies?
Well, very much so. I mean, you've only got to look at, the likes, they're powerhouse economies, India, China. You look at Brazil. They're big economies as far as population base and certainly consumption. And they're growing consumption. They're really changing the footprint from infrastructure all the way through to usage, and they're dynamic economies. So and young. I mean, if you look at India and Brazil, young populations, not so much in China. So I'm looking at more rapid take up as far as energy consumption over certainly for the rest of this year and then leading in for the rest of the decade. So it's a very exciting market to be a part of, and you can't rule out growing consumption over the years ahead.
Okay, so those are some of the factors which continue to impact the oil market. But Peter, if you can tell us what is the ballpark range where you're expecting oil to settle for the rest of this calendar year? Is it expected to be between that $65 to $70 per barrel for the rest of 2025?
I think it'll be cheaper, and I think it'll be cheaper because of naturally the increase as far as production and what OPEC Plus have identified from the production side of it. And I'm expecting Q4 to be actually a glut in the market, so probably cheaper prices. We've just got to get to that point again and work through this Northern Hemisphere summer, but I would expect Q4 to be cheaper than what Q3 is.
All right, so Q4 is likely to shape the outlook more than Q3. Thank you so much, Peter, for that input, and thank you so much for joining us this morning and telling us all about the commodity markets. Appreciate your time. Thank you so much. All right, then let's move on and shift focus back to the Indian market and take a look on how the F&O snapshot